Our next speaker is Katie Tovich, Chief Financial Officer of South32. Katie became South32's Chief Financial Officer in May 2019, having previously been Vice President, Corporate Affairs and Investor Relations, as well as Head of Treasury. She's responsible for financial reporting, management reporting, treasury, business evaluation, tax, investor relations, group assurance and corporate affairs, including community. Katie brings more than 25 years of global experience in the resources sector. Before joining South32, she held senior finance and marketing roles at BHP in Australia and Asia, including Vice President Corporate Finance, Head of Finance Worsley Alumina, and Vice President Finance Marketing Carbon Steel Materials. Earlier in her career, she held finance and marketing leadership positions at WMC Resources Limited in Australia and North America. Katie holds a Bachelor of Commerce from the University of Tasmania and is a member of Chartered Accountants Australia and New Zealand. Thank you, Katie.
Thanks. Well, it's great to be back in Kalgoorlie and presenting for the first time at Diggers and Dealers. First, let me acknowledge the traditional owners of the land on which we're meeting today and pay my respects to their elders past, present and emerging. Before we begin, let me draw your attention to the important notices on slide 2 here. There's a lot of detail there, so good luck reading it. Kalgoorlie holds a special place in my memory. As many years ago, I did work for WMC Resources at St Ives Gold Mines. And we used to have regular trips up to Cow, up to the Big Smoke. While I was working in Kambalda, I also got my pilot's licence, and I received my wings from the Kalgoorlie Boulder Aero Club. And more recently, I've enjoyed an annual trip up to Cow with my family to play in the Kalgoorlie Open tennis tournament, which unfortunately didn't run this last year. I'd like to thank all the people who have come along today, and also to those who are watching remotely. COVID-19 has seen us all change the way we think about how, when and where we work. The pandemic is still affecting parts of the world in different ways, and while here in WA we're enjoying relaxed restrictions, in other places, including some of our operations, life looks very different. So today, I'd like to start by talking about our response to the COVID-19 pandemic, then cover our strategy and our progress in reshaping and improving our portfolio, and finally, cover our capital management framework that guides all of our financial decision making. Let's begin with our response to the pandemic as we continue to adjust to its different phases around the world. Our simple strategy, disciplined approach to capital management, and our strong financial position mean that we're well placed to navigate the potentially extended period of uncertainty caused by COVID-19. Our COVID-19 response is built around 3 areas: keeping our people safe and well, maintaining safe and reliable operations, and supporting our communities. We've adapted our work practices at every site to protect our people and to ensure we can continue to supply our customers. And we've stopped all non-business critical work so that we can focus on what matters most. We've also contributed $7 million to our communities across the globe, helping to provide water, medical supplies, hygiene kits, and assisting medical clinics to boost capacity in local healthcare systems. To protect our strong financial position, we rapidly responded to adjust our capital expenditure priorities and suspended our on-market share buyback. As we navigate this unprecedented period, we have retained the flexibility to restart our buyback program as risks from the pandemic subside across our operations and our financial performance improves. In this regard, the global outlook continues to be driven by the evolution of the pandemic and the policy response on health and economic fronts. The initial post-lockdown rebound in activity is easing as pent-up demand fades and the virus outbreaks resurge. The extension of policy support will cushion to some extent a slowing recovery as we move into 2021. But the way the pandemic plays out and US-China trade tensions certainly remain key risks to watch. Our strategy of optimise, unlock and identify hasn't changed since day one, and it remains fit for purpose in these uncertain times. We optimise by working safely, minimising our impact, consistently delivering stable and predictable performance, and continually improving our competitiveness. We unlock value through our people, innovation, projects, and technology. And we identify opportunities to sustainably reshape our businesses for the future and create enduring social, environmental, and economic value. We currently produce base metals at our silver, lead, zinc Cannington mine in Queensland and want to grow this exposure, leveraging our existing capabilities through our development options at Hermosa and Ambler Metals in North America. We're also progressing with our strategy of exiting our lower returning businesses, including energy coal and manganese alloys. I'll talk to our progress in these areas in a moment. If we take a brief look at our existing operations, despite volatile conditions in commodity markets in recent times, they are performing well. In the 2020 financial year, we delivered record production at 3 operations, and we lowered unit operating costs at 9 out of 10 of our operations across the globe. Our zinc, lead, silver, manganese Hermosa project in Arizona comprises the Taylor and Clark deposits, as well as a broader land package. And we're continuing to unlock value across all 3. At Taylor, we've increased the size of our mineral resource estimate and have a pre-feasibility study currently underway. In May this year, we declared our first mineral resource estimate for the Clark deposit, and we've commenced a scoping study assessing options for an integrated development with Taylor, as well as for potential future market exposure to emerging battery technology. We've also increased the size of our land holding during the year, and we've identified 15 targets for investigation across the prospective regional land package. At Ambler Metals, in the remote northwest of Alaska in the United States, we've commenced a pre-feasibility study for the Arctic deposit with our joint venture partner, Trilogy Metals. Ambler is a high-grade development option and can be broken into 3 separate parts. First, the VMS-style high-grade polymetallic Arctic deposit. Second, the bornite copper deposit. And third, an attractive regional exploration package. Ambler sits behind Hermosa in terms of our project sequencing and is still at an early stage. The key here is the access road to unlock the region. In July, a record of decision by the United States Bureau of Land Management for the access road was signed. The record of decision approves the development of the Northern A route, which is a 340-kilometre long private gravel road. And this will provide access to the Ambler mining district. Looking forward, the focus of the joint venture will be on the development studies at the Arctic deposit, with funding also approved for drill testing of regional prospects and further exploration at Bornite. Having said this, and consistent with our COVID-19 response to keeping our people safe and well and support our communities, the joint venture took the decision to defer the Ambler exploration program for 2020. A key step in transforming our portfolio towards a bias to base metals is our exit of our lower returning businesses. Our agreement to sell South Africa Energy Coal is on track for completion, subject to meeting a number of material conditions. In addition, we've placed our South Africa manganese alloy smelter under care and maintenance and have entered into a binding agreement for the sale of our manganese alloy smelter in Tasmania. As you can see from the graphics on the slide, the successful exit from these businesses will significantly reduce our capital intensity, allow us to bring a greater focus to the remaining portfolio, and improve group margins and return on invested capital. Moving to exploration. From the outset, South32 established a high-calibre business development team with extensive geoscience experience and an in-depth knowledge of our target commodities and preferred mineralisation styles. We continue to expand our global exploration footprint by partnering and investing with junior companies to fund early-stage greenfield exploration opportunities in base metals. Consistent with our disciplined approach to capital allocation, we don't simply fall in love with projects. All projects need to compete for capital. And we'll only advance those of higher quality where we see value for our shareholders. A good example of this is Ambler Metals, which was originally identified through our exploration program. In FY20, we invested $15 million in greenfield exploration across our portfolio of more than 20 partnerships in Australia, Europe, North and South America. Subject to our ability to safely and effectively operate in a COVID-19 world in those jurisdictions, we intend to invest a further $18 million in FY21, with drilling scheduled at 12 of these projects across the globe. Our strategy is underpinned by our disciplined application of our capital management framework and our strong balance sheet. We continue to believe that the combination of high operating leverage and undue financial leverage delivers a suboptimal outcome for shareholders. Our framework prioritises safe and reliable operations and also our investment-grade credit rating. The next priority for our cash flows is to return a minimum of 40% of our underlying earnings to shareholders through our flexible dividend policy. Our framework is designed so that excess cash then competes for a home. We've developed a strong record over the last 5 years of returning excess capital to shareholders, returning $1.3 billion through our flexible capital management program in the form of an on-market share buyback and special dividends. This, combined with the $1.6 billion in ordinary dividends, means we've returned $2.9 billion, or approximately 40% of our current market capitalisation, to shareholders over the past 5 years. But we do believe that capital management does require discipline and balance, and that's why in March we took the decision to suspend our on-market share buyback in response to the unprecedented shock caused by COVID-19. That's also why we've invested in improving our portfolio through the addition of development options, including Hermosa and Ambler Metals. Ultimately, the development decision for these opportunities will need to pass strict return hurdles so that we deliver on the intent of our capital management framework, which is to grow return on invested capital and value per share. While this year's had its ups and downs, mostly due to the challenges presented by COVID-19, we ended FY20 with our operations performing well, a strong balance sheet, a pathway to exit our lower returning businesses, and with progress made on our development options. As we continue to navigate a period of potentially extended market volatility, we're focusing on keeping our people safe and well, sustainably improving our operating performance, and reshaping and improving our portfolio, all of which is underpinned by our strong balance sheet and capital discipline. That together will create value for all of our stakeholders. Thank you, and enjoy the rest of your evening.
Before you leave us, Katie, any questions from the floor at all? No? Thank you very much. That concludes proceedings for this afternoon's session. Look forward to everyone enjoying a drink in the marquee with the sponsors' cocktail party, the Clark Energy cocktail party. Thank you very much for your attendance.